So I've been in the industry for 30 years, and one thing I've learned is that you're constantly learning. The second thing, I guess, is that good times generate complacency. And on top of that, the herd takes, and there's always a herd, takes on many different forms. The trick is trying to spot where the herd is moving, and then obviously to get out of the way. For me, markets are a combination of either greed or fear. And at the moment, we've entered the period, the long period, I think, of the season of catching falling knives. So I think we've had a period of long stability, ever lowering interest rates. Portions of the market have got really extremely valued, or overvalued, and are going to be deflating for some time. And so I think people need to hold their nerve and look out for opportunities. Over the last year, prices have been quite elevated. It's been hard to find opportunities. There's been a whole segment of the market that's been, I think, in my view, very much overpriced, and that's coming down to earth now. At the same time, there's been a raft of companies which have offered value, and I think this is a period now where we'll see even more of that. Right, so we've attempted to do three things. The first is to avoid high multiple market darlings. Secondly, we're focused on very stable, good balance sheet, well-run companies that offer mainly staples and that are economically resilient, that have economically resilient business models. Thirdly, we've built up a nice level of cash, about 17% of the portfolio. I think it's important that investors don't panic at this stage. We've had markets fall almost double-digit across the globe. People are concerned about interest rates going up. And so while you need to be alert, just make sure you don't panic. On the flip side, it's times like this where real opportunities present themselves. Good companies are getting thrown out along with the bad ones. And that's our job, is to find out where the mispricings arise. And you need volatility to create the mispricings. So this reporting season was interesting. There were quite a big bunch of companies that had very minor earnings upgrades. They were already on an average multiple of 30 plus, and they went up over 15%. There were a number of companies that might have missed their earnings expectations by a fraction and fell 15 to 20%. So for me, my main learning out of this reporting season was that the machines are well and truly running pricing in the short term. We saw huge overreactions both ways, up and down, to company announcements about their earnings over the last period. And there was a lot of skittishness. At the same time, the underlying economy is in good shape. In spite of the media and maybe the politicians' best efforts, things are ticking along quite nicely in the Australian economy. We have our risks, but full employment currently underpins most things.